My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make some money. My job, not just to entertain, but to educate and teach. So call me, 1-800-743-CBC. Tweet me, @Jim Cramer. Look, when the CEO of JP Morgan, the world's largest bank, says there is scary stuff ahead, well, guess what? You take notice. When Jamie Dimon reels them off, Russia, Ukraine, oil, gas, war, migration, trade, China, not to mention the possibility of 6% interest rates, that's what he's talking about, because of persistent inflation, you get scared. And the market plunges right on time. Although, fortunately for the bulls, the fear eventually subsided. Dow ultimately finishing up 109 points. S&P advancing 0.53%. NASDAQ jumping 0.72%. Now, earlier this week, I told you the market would find its footing once stocks came down enough and long-term interest rates started falling. And that's what really happened today, and it's why the averages ultimately turned. That said, I still think it makes sense to do some selling in certain select areas, especially the techs and the fintechs and SPACs with crazy town valuations and no real earnings. But beyond raising some cash, after a bad couple of weeks, stocks do become, let's say, they get cheaper, right? They start pricing some of the negatives. When Dimon talks about the war in Ukraine and high inflation, it's not like these are new worries. We went over a lot of this with him, and as you'll see later tonight, I came away short-term bearish on events in Washington, but totally bullish on the events at 52nd and Market in Philadelphia, the underbanked street we visited with Jamie, where he put up a new Chase branch. No, it's really a community center. It's much bigger than a branch. Now, many times during our interview earlier, it was on the halftime report and later in the show, I found myself thinking, who cares about where the Fed funds rate is? If Chase can help pull up an underprivileged neighborhood, maybe we're in a much better place than Wall Street's willing to believe. But you know there's a problem with that thinking. The resurgence of a gritty West Philly neighborhood, as excited as it is to this hometown guy, doesn't propel the S&P 500 higher because the market, well, it just doesn't care. In a gloomy coda to an otherwise stellar event, you have to wonder how aggressive any banker can be if they believe the Fed will take rates sky high in order to kill inflation. Then again, Dimon's my age. We cut our teeth on 19% interest rates in the early 80s, and we did pretty darn well for our customers. Maybe the Fed funds rate's going to 6%, and it won't be the end of the world. At the same time, there are always cycles that are somewhat immune to the day-to-day macroeconomic news. Anything with exposure to these cycles may be worth buying. Dimon mentioned the agricultural cycle, for instance. That's on fire. You know I like Deere. He talked about our amazing oil and gas profile, which is why I like Halliburton for the charitable trust, tempted to buy more of the oil service giant. Because even if crude goes nowhere, the oil service guys stand to make a killing. Because producers need to spend fortunes on drilling just to keep production stable. And he talked about tech, especially tech that powers, yes, machine learning, like the artificial intelligence that helps JP Morgan engage with its customers, detect fraud, along with many other mundane tasks, even related to trading. In other words, without mentioning its name, he's actually talking about NVIDIA, which shot up 14% today thanks to some great numbers last night. Management sees more orders from the data center. That's a big change. They see the semiconductor glut in gaming ending. That's a big change. And they're confident that artificial intelligence has gone mainstream thanks to the popularity of ChatGPT. And that's all fantastic for NVIDIA. Remember, NVIDIA spent years developing this exact technology, accelerated computing. And now they have a gigantic lead on the competition in what could be a $600 billion brand new market that didn't even exist pretty much a year ago. CEO Jensen Huang, been on the show a bunch of times, compared the breakout of accelerated computing. You got to pay attention to what he's saying. That's why I told everyone to watch the conference call. The breakout he compared to internet going mainstream, rise of the smartphone, rise of the personal computer. And NVIDIA now has the kind of dominance with AI that Intel used to have with the PC. They practically are the only game in town. They are AI. No wonder management can't measure the potential demand, because it's practically endless. A ton of tech stocks ended up running on NVIDIA's positive quarter, but that is plain laughable. It was like when we saw with Palo Alto Networks over this week. The whole point is that NVIDIA is running circles around the competition. No one is near them. What's good for them might not be good for anybody else. So where does it leave us? Bottom line, we've got a schizophrenic market where each local surge of hope gets squashed by the next national or international fear, which gives way to another round of hope, and sometimes all in one day. Manuel in Illinois. Manuel.
Yes, Jim, I have a question on STZ. I listen to the conference call and do my own homework like you tell me. The only positive thing I heard from that conference call was they were trying to divest the Canadian portion of the weed business. I just want your thoughts.
Well, look, Constellation Brands, as I tell many people, because we've owned it for a long time for the Charitable Trust, and we'll be going over, by the way, at Saturday's big shindig just for Investing Club members. This is a cash flow story. Beer generates a huge amount of cash. For that, they can do anything. They can buy back stock. They can increase the dividend. I'm in it for the long haul. That's the only way to view beer. And don't forget, beer does quite well in recession. Jack in Ohio. Jack. Jack, speak to me.
Hey, thanks for taking my call, Jimmy.
Of course, Jack.
Hey,
what's shaking?
A Energy's on a pullback out of EMD and PXD. I was going to stay with Devon, DVN.
I was disappointed with Devon. They did not do the number. It caused me to shudder, frankly, because Rick Moncrief needs to come on and tell us what went wrong. There's got to be something, because the other oil companies did not see that coming. And I want to know more about it, because, boy, did it ever wreck my day when it happened. More than my day, actually like 3 days. All right, look, actually now, this market is schizophrenic, and each local surge of hope gets squashed by the next national fear, which gives way to another round of hope. Sometimes all in the same day, like today at Mad Money Tonight. Wall Street burned Papa John after earnings. So are investors getting a buying opportunity at a pizza chain that simply has had a great hot streak? I'm checking with the CEO. Then worried about a slowdown? Well, then I'm seeing if PG&E, yes, the giant Northern California utility, could be a strong defensive addition to your portfolio. Sit down with the top brass. And earlier, I had a chance to talk to JP Morgan CEO Jamie Dimon as the company opened a terrific community branch in my own town of Philadelphia. You do not want to miss it. That's kind of news, Jamie.
It'll surprise people, yeah.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.